Well, not clickbait at all. There are two things in the charts this week that absolutely scare the whatever out of me. Let's get started with our stats. I'm going to actually blow through some of the stuff early on because I don't think it's that important this week, and I'm going to focus on something that I think really are the tea leaves that we should be reading. It is important to not get stuck in the past when you are trying to predict the future of the housing market. My name is Stephen Meade with Domicile Real Estate here in Southern California. We are on a mission to help California's renters become homeowners. Why is this important? California has one of the lowest homeownership rates in the country of all states. And statistically speaking, the wealth, the net worth of families and households that live in a home they own is 30 times higher than those who don't. This is very important for your financial trajectory. But let's go ahead and get started. If you're watching this, you probably already believe in homeownership. This is just something we're seeing that really jumped out at me this week, and I think it's important that we talk about it. So let's go ahead and get started and go through some of these stats. So the first thing here is we're going to talk about closed prices. This looks like good news, but remember, closed prices are the past. So our entry-level single-family home, it is at $718,000. That is a drop, right? That is the lowest point it has been since, April or so of last year, maybe even a little bit back farther than that. That sounds like great news, but I'm going to tell you it is an illusion. We look, even our condo number is down a little bit. We look at our total monthly payment, $56.63 for that entry-level single-family home. Again, we have not seen that number in over a year. And then even going back, I think even if we look at or about a year's when we last saw something similar, if we go back in time a year ago, we were at about $5,400. Likewise, kind of similar results on the condo front. And our minimum household income required, that has dropped below $110,000 for our entry-level condo and $137,000 for entry-level single-family home. Why am I rushing through this and talking fast? Because it does not matter with what I am about to tell you. So we go through and look at our 14-day absorption rate, right? This is always a little bit of a weird time of year. We see these numbers jump sky high because buyers keep buying, but no new homes come to the market. Then they go into the toilet, and then they bounce back a little bit. I would have expected a bigger bounce back, but remember, we look back 2 weeks with the statistics, so we are still basically looking back to the first week of the month or close to that first week of the new year. And we're going to see these numbers kind of in that same range. They're at 72, 67%. I expect that next week they will come back with a fear. If you look at the kind of shape of the curve here, they're heading upwards. So now we're starting to see some news that is neutral, right? This news from the past, right? In terms of closed prices, this is great news for first-time homebuyers. But I'm telling you, it is looking backwards. Now, if we look at our absorption data, that's kind of news that's much more recent, right? This is the last 2 weeks of information. But here we start to have a problem. 14 days still active percentage. The lower this number is, the more competitive the market is. So now, as you can see, we have actually gone back to numbers that are starting to look like July of last year, and they are heading downward quickly. I think these numbers are going to continue to drop and start to look a lot like the spring of last year. So we're going to still call this neutral information. But now we have the problem. These are the two charts that I think really are going to dictate a lot of the type of spring that first-time home buyers are going to see. So I'm going to spend some time actually talking about this because I think this is the most important thing to pay attention. So our first chart here is total inventory, right? We know about this chart. We have talked about this chart. And you'll notice something that looks very encouraging in a way, right? That is, inventory is going up. It bottomed out at the end of the year, and it is starting to rise. Now, if you contrast this with last year, inventory was still falling in the month of January, right? And in fact, it didn't bottom out until the end of March last year. So this looks like good news, right? Inventory is going up. This is great news for buyers. Well, there's a couple of problems with this. The first problem is somewhat of an obvious one that you can see here. that is that these prices, or this is still much lower than it was at last year. I mean, look, we are below 1,500 homes, whereas we were, probably towards 1,800 homes last year. So the total amount is still less than we were at last year. The other thing is about what I'm to show you on the next chart. This is weeks supply of homes. So if we were to do this, total inventory is an absolute number, right? X number of houses available. Weeks supply of homes says, okay, let's take that inventory that we have, and now let's think for a second. Let's think based on how quickly homes are going into escrow, how many weeks before our supply of homes would be exhausted. And this is called a relative inventory number. And look at the dramatic change we have seen on this relative inventory number. 7.64 weeks for condos. We really haven't seen that kind of a number since back in August. And then if you look, 5.85 weeks of relative inventory for our entry-level single-family homes. We have, again, not seen that number since, back in September. But it's also, look at the trajectory that we are seeing on this. This is not totally unusual to see around this time of year, but to see these numbers dropping so fast, so quickly, and in combination with total inventory going up. So I'm going to talk about the math and why this is important for a second. I'm going to say this pretty slowly. So if you've got a situation where your total inventory is going up, right? The number of houses is rising, right? That sounds like great news. And yet still with that, your relative supply of inventory is taking a nosedive. What does that tell you? Well, mathematically, that tells us that the number of homes going into escrow is skyrocketing. That means buyers are coming out of the woodwork to place bids on houses and to get that inventory into escrow. So when you see, despite increasing inventory numbers, which means we have pretty strong supply at the beginning of the year, not unusual. People don't put their homes in the market pretty much through December. So you kind of got this pent up supply. But to watch demand just growing so quickly, in the face and causing such a reduced relative inventory, what does that tell me is going to happen? So that tells me that what we are in for by seeing this quickly dropping is, I think we are going to see us be into the 4 weeks of inventory for single family homes very, very quickly here. I think we're going to get to the point we were at in March or April of last year. I think we're going to see that point happen here in February. So we're going to be several months ahead of things, and we're going to do it with less overall inventory than we had. Obviously, interest rates are a big factor when we're talking about this, right? Interest rates are going to be a huge factor in determining, is this trend going to continue? But my prediction is, what happens when you see these relative levels of inventory dropping so quickly? This leads to more multiple bidding scenarios, and multiple bidding scenarios result in higher prices almost every single time. So why are we telling you this? Because it's important to understand where the market is heading. If you place a bid on a house and it's the one you've been waiting for, understand you might face more competition than you're expecting right now. It also means that if you're thinking of sitting and waiting because you think things are going to get better as we head into spring and into summer, that is not true. I do not predict that things will get better. I think things will get tougher for buyers. So if you're sitting on the sidelines, really, it's not a situation you want to be in. If you're trying to time that market, it's not going to be something that's going to be successful for you. Anyhow, thanks so much for watching, everybody. We love having your viewership. Don't forget to like, subscribe, and hit that notification bell. And of course, if you are a first-time home buyer and you would like to get more information about how 2024 can be your year to become a homeowner, it's your turn. Definitely reach out to us. We would love to represent you and your interests as a buyer. We'll see you again real soon.